Friday. What have we got going on? Looks like overall markets are going to open down, but we still have 30 minutes, so you just never know. You can't make your decisions off of what's happening now and 30 minutes from now. What I like to do is just kind of look through what's actually going on. Everybody's got theories on where the market's going. I don't care which direction it goes. All we're interested in is pulling money out of the market. There's two ways you can do it. You can trade and you can collect dividends. So far this looks like today there's not going to be too many ex-dividends today. I'm just looking at the portfolios, didn't find any. So that doesn't mean that there aren't ones in the overall market. We've got a small, in comparison to how many stocks are out there that actually pay dividends. But yeah, normally Fridays nobody really pays anyways. There's probably I don't know, 10 or 20 that do. But doesn't look like there's going to be anything paid until Tuesday. Ex-dividend will be on Tuesday. We actually get paid, what, $3.80 today? Doesn't sound like much, right? But it is not even the middle of the month. But we've already collected quite a few dividends on these three small accounts here. And that's the whole idea. Number of occurrences. We're trying to get as many occurrences as possible. Spread that money out between the accounts. Looks like they're just going to continue to print. I don't see that stopping anytime soon. Maybe one day we can start investing in notes again. This gets up for over 4%. I'm game. If everything shapes up right, we'll go down through the list, see what's actually moving. Not a heck of a lot. Fridays are usually pretty slow, but you never know. You just never know. Something can happen. Something can change. I don't see anything worth looking at there. Nothing there. Looks like Honeywell's on the move for some reason. Don't really care. It's going to do what it's going to do. You can't control it. Just let it happen. Let it come to you. A lot of people make a lot of mistakes by, they're like, oh, I got to take profit. I got to take profit. And I say, yeah, that's the objective. But when you put your sell orders in, based on your plan, you stick with your plan no matter what. I don't know how many times prices come up within a penny, gone over by 4 or 5 cents. It's just you're too deep in the, in the book where you just didn't get filled. There just wasn't enough buys for you to sell. And it happens on the other end too. I've seen it come down, go right past my limit, my buy limit, and go straight back up. It happens, but if you're spread out, you're not worried about it. So what? You just miss that one little occurrence. But if you're set up right, it will come to you. The price will come to you. Don't don't run after it. It's the worst thing you can do. Sit here all day looking at a screen. Man, I got to get it down to the minute chart because I'm going to look. You're going to spend your whole day watching charts, and you can be doing something more productive. Watching these charts doesn't make you money. What makes you money is strategy and managing your portfolio. You got to get it out of your head. There's some people who sit on these computers all day long looking for something to pop. And then when it does pop, it's too late. Like if you see this massive jump, like, oh, hey, I saw this. Are you getting in now? Well, yeah, you would have partook in this, but how do you know? You don't. You don't know where the market's going. Let's take a look at this other one. As you can see down through here, we got a bunch of ones paying on the 16th, which is Tuesday. Looks like 17th, 16th. April. There's another 16th, so it looks like 16th is going to be a pretty heavy day. 18th, 16th. That's just one small one. So you can look down through here. I don't really pay attention to it. It's just nice when they come up. You're like, hey, to show you what's actually going on. When these dividends are executable, and then the record dates. They don't give you this information here. It could mean one of two things. You really have to follow your account, statements and look on a day-to-day basis if you really want to know when it pays. I don't really care because it goes into my cash account, so I'm not sweating it. I mean, worst case scenario is I get paid $1.40 versus 11 cents. If I was close to closing this position at a gain, so I lose that 11 cents. The trade-off is I get $1.40 per share. So in this case, it'd be 30, by 11, $3 versus $30. So just round figures. But yeah, people want to see these, huge moves in the market, and they think that they're going to have the wherewithal to jump on board. Well, let me tell you, you can catch some of those moves if you already own it. You already got some skin in the game, you can partake in those moves, and it happens, even on dividend FANG stocks. It doesn't have to be growth stocks. What happens if you're holding a dividend paying stock and you have, 50 shares and it goes 2 for 1, right? So now you got 25 shares. So you're getting paid half the amount of dividends, but you got this, you've got probably increase. Well, how does that work now? I got that backwards. So you'd have 100, right? If you had 50, you'd have 100 shares, 2 for 1, but the price would be half. Right? So you still have the same value, but now you're getting paid twice as much in dividends. I'm thinking 1 for 2 because I just saw that the other day. 1 for 2, 1 for 4, 1 for 10. There's lots of resources out there, and there's lots of people that will tell you when dividends are being paid. I don't follow that philosophy on a daily basis. I mean, some people do, and they can make you can make some pretty good dividends on it, but you really have to be spread out. Get some of this stuff off the screen so we can see. Charts get a little too small, but yeah. It's all good. Now you can see how this kind of transpired. We've been in this position for a little while. So that's the bottom, right? 0%. So we've actually got 2 positions here. Looks like it's at max shares of 5. So we can get this one off here. It's changed over time. So it actually went up in value. But yeah, you never know. As you get closer to the open, a lot of this stuff starts to change pretty quickly. But overall, I think the market today, what is it? Looks like it's going to be down. Bitcoin's falling. It's down to 55 after being up around 58. Futures pointing down. Dow's showing to be up a little bit, but the ES Mini is looking like it's going to be down about 15 or so. That's the NASDAQ looking. Yeah, NASDAQ's going to be down a lot, 1.5%. What do we got here? So yesterday I was working on this chart that I can get it to come over here. I don't know why it has trouble getting from one screen to another. Anyways, you can see the increases, right? This is our total amounts from the first with dividends and profits. This is a good way to look at your gains, because when you're looking at your portfolios and you're seeing, in your statements, oh, I'm up, $2,000. It's like, are you really? I mean, that could be your overall portfolio moving, but what are you actually profiting? Your profits and your dividends equal your total gain, right? That's what you actually pulled out of the market. This is what we're looking for, right? So this is cumulative, right? So you can see how it increased to 80. Yesterday it increased to 886 from 865. That was just adding these two together, add it to this one, and it comes to 886.60. That's our actual, okay, gain. Now you look at the predicted, right, based on this information here. This is actually dropped from 13.6 from the day before down to 12.51. You can see the reason why, right? So you didn't make as much, but you're still averaging 12.5% on your move. So this is just a easy way to see which way you're going. So you're making more than just your dividend. So if your average dividend was, say, 8, it's kind of hard to track and then go back in. You can set up a little chart like this and see, okay, this is the way I'm going. You can see that it's positive. This is what you want to see in your portfolios. If you're, constantly hitting stop losses, because you've been told that that's the way to protect your account, you're constantly going to be losing money. You're going to see an upside down chart, and then it's going to be hard to understand what direction, if you're actually winning or not, because if the market's up and all your positions are up but you hadn't sold anything, that's unrealized gain, and that can give you a false sense that you're actually making money, because unless you realize it, right, realized gain is much different than an unrealized gain. And there's many portfolios sitting out there that are up, like I'm up 50%. And it's like, yeah, well, that's what it shows you in your account. But how much money have you taken? Like how much cash how much did you sell? Did you sell anything? No, I've got, this many shares. It's like, well, that's great. But if the stock goes down in price, let's just say you have one for simplicity's sake, and it goes down 10%. Now you're down 10%. I mean, you have no way to get that money back if you didn't sell it. You have to take profits. What those profits are really based on the size of your account. You have to have some type of metric that allows you to pull profit from the market. Everybody thinks if they just sit and collect dividends that their account, like you could collect dividends for 10 years and your stock price go in half, and if you sell at that point, man, there's no way you'll ever get that money back. I mean, it's 10 years of dividend payments do not equal half the price, not unless you're getting some serious dividends, high yield. Like, I don't know what the yield would be, but I'm sure some smart cookie out there could put together an Excel chart and figure out how much you're actually losing by taking, small losses all the time. Those small losses add up. Those are occurrences too, so we don't take small losses. Well, let's go down through here. We got about 15 minutes. We're still looking at these CEFs are still paying. TLT still tanking. It's another monthly pair, although it's not a CEF. That's a CEF. This particular one, I know that Cornerstone Strategic Value has been around since 1973. It has an interesting way of paying dividends. So, like, if you hold it for any amount of time, can't even remember what I know it's high. Yeah, it's like earning 14.4%, which is not too bad when you consider what a bank's paying you, or even what another stock is paying you. But yield is much different than what you're actually getting paid. So you have to pay attention and understand what you're actually buying. Dividend amounts are different than yields. So don't confuse the two. Yields give you a good idea of what you're getting in return, but it's not the holy grail to look at. We could definitely use a pullback and pick up some more long positions. Been real light on buys this week just because of the direction of the market. We don't buy into surging markets. It's not smart because nobody knows where the top is. But if we can close out some of these larger positions here, that have been in these accounts for some time, yes, they've been paying dividends, but it's always nice to, reset them and then spread that money out even more. But in a market that's moving up, most people make the mistake of betting that it's going higher instead of playing conservative, and understand that you don't, if you want to call these tops, you can call it whatever you want. I don't call this a top. I was just like, if this price is here, look, it's been up here before, right? So can you call this a top? No. All-time highs, all this type of lingo can really confuse people. You have to look at the price. The price is the king. It's $6.53. That's what it's trading for right now. If you wanted to buy something, then it's important, why you're buying it and if you're going to get paid dividends on it. If you're of the mind that, hey, I'm only going to buy growth stocks because they're the only ones that make money, well, you're probably going to find out that that's not the only way to make money, but it's going to take you a few years to figure it out. All you have to do, if you want to see the richest people that play in the stock market. Individuals. I'm not talking institutions. Okay. Just go over to stock gurus and look at what they invest in. And then add up what they make in dividends each month. It'll blow your mind. You know, yes, they may have some growth stocks in there, but these are millionaires and billionaires. They're not screwing around. They want that easy money. Easy money is called dividends. And how you make more dividends is by trading the dividend amounts. That's a simple process. These guys, they don't have to sell. They can sit on their positions for years. They don't care. If they're getting paid $150 million a quarter, what do they got to worry about? They can do whatever they're doing on a day-to-day basis. I mean, I don't know what, say Warren Buffett does. What does he do? I mean, as far as I know, he doesn't do too much. He's in his, what is he, 90 now, something like that. But take a look at all the other gurus that are out there, and just, you can learn from what they do. You want to try to have, instead of having one or two positions, you spread your money out, which gives you exposure to more of the market, right? Less risk. It's less risky to have your money spread across multiple companies than it is to, like, even if you're in the same sector, if you're like, oh, I want to get involved with all the pharmacies, and I want to buy CVS, Walgreens, what's the other ones that are out there? Well, Walmart, whatever. You spread your money. You don't just buy one, because anything can happen to all three of them. But the chances of that happening all at the same time, them all going out of business, it's slim. I'm not saying it couldn't happen, but look at probabilities and possibilities. Anything's possible, but that's probably not likely going to happen. So, and then you take it a step further, and then you say, okay, I'm just going to invest across even more, and then I want a consistent income, right? And if you have a small account, get used to having small amounts of money coming in. People scoff at it. It's like, hey, I can make $25 a month, right, off $2,000 or $3,000, and I'm getting enough to pay, say, a water bill or a phone bill or whatever else. That's money that you didn't have to work for. So you have to think small when you're starting off. You keep thinking, yeah, I'm going to take that $1,000 or $3,000 and I'm going to buy Tesla. Okay, you got 3 shares. Okay, so three things can happen, right? Price can go up, price can go down, and stay the same. But one thing you're not doing is you're not making any money until you sell it for a profit. So what's your profit target going to be? 10%, 20%, the moon? You're just going to sit on it, let it go up and down? I mean, people do this all the time. They make this mistake. The money's not working for them. Money working for you is you taking profit and taking dividends. Every month, every day if you can, just something coming in. It's a snowballing effect. It's like getting a small amount of interest at your bank. People got a ton of cash sitting on the sidelines, sitting there earning less than like 0.5%. I mean, that's better than, buying something that doesn't pay you any dividends and sitting on it, hoping it goes to $1 million per share. It's not going to happen. If you don't take profit on it, you're never going to realize the game. But people, I guess, like to look at that and show their friends, say, hey, look, I bought this for $500. Now it's worth $5,000. Like, well, that's what it says. But if you sold it right now, you'd have $5,000 in your pocket. But you ain't got $5,000. Not until you do something. So, when and where you make your decisions, you have to have a plan. So get a plan together. You follow us here, it can show you some interesting ideas, and you can make up your own mind if it's something you want to do. But most people want that quick quick fix. I want that money. I want that money now. You know. Looks like a JQC. I think that thing didn't pay dividends for a long, long time. Maybe I'm thinking about something else because this has been pretty consistent here. See here, you can see that this one, the dividend amounts started coming down each month. Now, I don't really care, but it's not something that, if we go over to another chart here, I have to concentrate on some of these. Which one was that? The heck was that? JQC. There it is. So if we look at the chart on this, we can see we can go on max shares of 333. We're not in a situation where we can, well, I guess we could put that on the chart now. Let's do that while we're got a little bit of time here. As we can see where the average cost is now. Yeah, there we go. Sometimes you can't see it, but we're going to put in our 50% retracement. This is a strategy I came up with. I don't know anybody else that's using it, but I get rid of all these lines. I don't use Fibonacci like, you know, all the books tell. I use it as a tool just to mark at a 50% retracement. So see here, because the max shares are higher than what's in my account, I can actually buy more. So what I can do is make sure I don't already have an order in here on JQC. Nope. Okay, so we'll go back there. So what I can do at 643, just a rough, right? I can buy, right? Let's move this up a bit. Get rid of that sell order in there. And I can go 33, right? Because that's 10% based on the size of the account and 10% of the max shares. That's the trading allowance. That's on the size of your account. So what we want to do is put a limit order in for that amount of 643. If it comes down, hits it, then we'll be up at the max shares, right? But it'll also do what? It'll bring our average cost down. Now we already have 277, so it's probably going to bring it down maybe below 7, but that's going to get us closer to our target. Well, not our target, but our average cost. And then what we'll be trying to do is target that 81 cents above it, right? So that's it in a nutshell. So if you can figure that out and follow that logic, you'll make better trading decisions on dividend paying stocks. So we'll transmit that. Okay, so that's orders in there. That's just something I come across. You know, I don't look at these accounts except when I'm getting online here. I have other accounts that I have to deal with. It's hard to go through, you know, hundreds and hundreds of stocks and be up on everything that's happening. Especially when it doesn't come up on my scan. I put a lot of faith in the scans. I'm always looking for new opportunities and just watching and seeing where things are going. Does it make sense what it's doing? You know, you can look at it and say, oh yeah, that's going to the moon. Good on you. If it is, great. You know, all I care about is hitting that number. If you're saying, well, what if it goes to 20? I was like, what if it does? I've already taken profit. I'm on to something else. You got to get in this frame of mind if you want to be a successful trader and investor. If you get into this, you know, oh, hey, you know, I think it's going to go to $50. Yeah, whatever kind of tool you're using that's telling you that, it's not based on anything but speculation. What we want is profit. We want to try to profit as soon as possible, right? Based on the metrics that you see. You know, it's like, okay, if this comes up and hits it, great, we're at, right, 1460. But all right, we're fixing to open, so let's go back to our mosaic and see if how busy we get. Definitely open down. And we bought JQC. There we go. Okay, so let's take a look at that chart now. So 6, where's it at? JQC. All right. So now if we look at this, watch what's happened. Okay, now it didn't get under 7, but now we know that our average, so we can play this to the downside as well if we wanted to. We've got other platforms, but now what we're going to do is we're going to put an alert in down here. This thing doesn't move that fast, so we'll leave that in there. But we're going to take a picture of this, put it back to where it is. So now our target price, well, our target price isn't on here yet. We could put it in there. Like I said, it's going to be 87 cents above this green line, right? So it's going to be what, 91, 7.91, close to $8. Well, it's probably going to take a while to get there. So guess what? We're going to be collecting dividends on this position. So now you can see our max shares or our total shares here are 310 based on that trade. But we still have another, what, 23 to go if we needed to. But our next trade would be down here. We're not interested in trying to max this out. What we're trying to do is stick with a plan and buy when we're supposed to. So let me take a picture of this chart image, share this on our Twitter feed. Which one was that? I keep getting this one mixed up, JQC. Okay, so we save that. We can go over here to Twitter. So we're long JQC. I'll save that. Turd image. Yeah, do it again just in case. I'll get the right one up there. Sometimes you get duplicates. Yep, I already have it. So we're right. So we're going to open that. What was the dividend payment or percentage on this thing? Yeah, it's making 12 or 13% at that price. So I'm willing to, you know, as long as I'm making some. Now remember, this is monthly pay. So this is paying on April 14th. It just paid, right? Or did it? Yeah, it just paid this week. You can look at it on here and see when it did. Yeah, March 12th. So it paid today. But you ain't going to get that. That's why it dropped and came back down into it. So that's a learning experience right there. You're not going to make those dividends if you buy it on the day that it goes ex-dividend. You're only going to get that amount if you buy it the day before. But I'm not worried about it because it just adds to our total. So now you can look at it and say, okay, what's this thing going to make? You can say, okay, I've got 310 shares. Multiply that by 0.0681. It's making $21 a month, right? So what's 2111? 2181 divided by 2111. Oh, went the wrong way. 2111 divided by 2181 times 100. So you're making 1% per month, right? Well, that comes in line, you know, well, 1.1%. So you're looking at 12.8 for the year, right? Because it's 1% per month. There's 12 months. That's how you come up with 81 cents, or you can do it this way, 21.81 times 0.8172. That's, oh, you got to do it by percent. 21,310 multiplied by 0.8172. It's how many shares you have multiplied by your dividend amount per year per share. So it's 253.33. Divide that by 21.81. It's 11.6 on the year. So there's a little variation right there, but it's probably just my bad math. But you get the idea. Let's go back over to the, let's say, excuse me. What we're looking for is the ones that are coming down. We already have alerts in based on our scan. This is the last week for the scan. I'm going to actually go over a few of the things on the scan. So we'll see. Let's shrink this up a little bit here. Dang it. I don't know why I can't get this just to slide. Alright, so this is the full scan for the week. So we see there was, I think, 88. Yeah, so I didn't highlight this week's things that are already in the portfolio, but you can see there's two ways to go after this, and the last means the close on Fridays. What we do is we target, in my specific, with these portfolios, what I do is I look for the limits, try to trade off the limits. So if you haven't watched me before, you can see what I do. These particular, all of these, I mean, we can go down through some of these and see where they actually sit. Let me get a, we'll put it side by side here, and then we can see. So now you see up here, max shares are 9, and if you had 100,000 or below 100,000, you wouldn't be able to trade these, right? Because they're below 1. And if you had 20%, then that would be 1.6. So understanding these values is important so you don't get yourself into trouble. And you can see there's quite a few that would allow you in. And these values change, right? So it's based on information that's in the algorithm. So we look at, see, though, you can see it didn't even come close to hitting our target on there. Right, looks like pH, well, I don't know why I'm looking at those. It just said these, I can't go into any of these accounts because they're all below 100. You can see we've already been involved in FANG. And if we look at the other chart, right, we go to FANG. It was probably in this other account. So you can see I already bought and sold it, but we're willing to go back into it again. That was this week. We're just going to do all the odd numbers first. SWK looks like, I don't know what happened there. Kind of missed that one. Well, it never did come down and hit it. That's probably part of the reason. 182.51, that would have been down here. Never touched it. EOG, let's go down to another one here, SYY. Yeah, you can see I went and bought this week. It's kind of hanging out there. But it gives you an idea. You know, there's no reason to really follow these. As long as you do your work on your weekend when you get your scan, then you'll not have any trouble. And when you get these hard moves up, these are the ones you don't want to be a part of. Like if you got in now, you know, I'm not saying it can't go higher, but I like to buy things on weakness, right, and sell things on strength. That way I never take losses. Okay, so we just sold RC, so let's go take a look at that. And let me get this chart off of here. It just gives you a brief idea of what's going on. We've got about 20 minutes left. Let's go find what account that one was on. I'm assuming it was not that one. It was not that one, so it's got to be the other one. So we look at RC, and you can see that we sold RC. Let's go take a look at the chart. So we bought JQC, sold RC. You can see there's no losses. Come down to RC. That'll populate the, the chart. Okay. So we'll get rid of all our annotations. I don't think that was on the scan, or maybe it was. Let's take a look. Nope. Not that I can see. Not on the scan. So and being Friday, I'm not too concerned about it. It looked like dividends up and down. Doesn't matter. So we're out on that, but we'll take a snapshot, send it to our friends on Twitter. RC. Yes. We'll add description. Nothing more to it. It's just, you know, simple, easy Friday. Got the one long for today, so I'll annotate that. And there may be more, but you don't, you know, you can walk away right now. If you have your phone on you, you've got any one of these platforms that are available for you. You can trade these things at zero cost. You know, when it comes to equities, most of your platforms, majority of your platforms, do not charge you for the trades. You're adding liquidity to the markets, and that's what they like. In the meantime, you can be pulling that dividend at but we really do need a down move in the market so we can buy some more. See some analyst ratings. I'm always getting messages from Interactive Broker, TD Ameritrade, and E-Trade. But yeah, let's see what's happening here. Yeah. Yeah, looks kind of mixed to me. I think oil is probably going to continue to go higher, but your guess is as good as mine. Yeah, it's got the same one that opened 15 minutes ago. So it's just a waiting game. Everybody thinks that's a big drop. It's like 12.5%. Up and down. That's how you make money. Up and down. But everybody wants this big move. They want to buy it here and sell it up here. And that's great if you can do that. You never prove it works. Maybe you get lucky once or twice. But it's a long time to make profit and see 12, so 10, so 4 months. If you can make, let's say you could buy 100 shares at 141, so that's 14,132, and you sell it for twice as much basically in 4 months. That's one way to do it, right? What did you make? 100 shares by 140, so you made $1,400. I can make $1,400 by spreading the money out in less than a month. So, but if you're convinced you know where the price is going, that would be the thing to do. But nobody knows, so don't fool yourself into thinking you know where the price is going. See, Pepsi's almost back to even. It's funny how that works. When people ask me all the time, why wouldn't you buy more here down below? Why? Because I stick to my rules. Doesn't come up on the scan. If this comes up on the scan for next week, you're damn right I'll buy it. All right, if it's on the scan, let's just keep this in a mental note. If GIS shows up on the scan this weekend, I'll be long whatever the max shares are. Let's go over to the classic and see. Excuse the pup playing in the background. He's 12 weeks old. He's playing with our other dog. Of course, he doesn't know how to settle down. He's at that age. A GIS, so it's at 31. And I've got 6. So yeah. If that shows up on the scan, then we'll be in, just like any of the others, you know. Go back over to Mosaic, Pepsi. Now that's so close there, I probably wouldn't put any more money into it. Yeah, see, that's where charts are deceiving. So that's $1. Yeah, maybe I do it, maybe I don't, because we got, I don't know how many shares in there. But it's got to come up on the scan. If it's below this green line, I can buy more. If it's not, if the price is above this green line, I cannot do it if it's on my scan. There's no reason to. You're actually making your position worse by buying above your average price. Don't make that mistake. A lot of people do that with the DRIP plan on their accounts, the dividend reinvestment plan. So it doesn't matter. Oh, the price is going up. And you keep making your position worse by buying more shares, more than what you did before. Just math. Don't do it. So Han doesn't look like it's going to jump. We already sold RC. We saw that. Now, did I catch it at all-time highs? I have no clue. You know, that was just what the math told me to do. I didn't ask or guess at it. You'll see this time and time again. This may end right there and be done. Now, what are the reasons? Could be because whoever's buying saw that position and said, well, we think that maybe it's institutions saying, I think that's a short position, so they went after it. I don't know. Nobody knows. Nobody knows why price, look, you can look at it and say price is moving because supply and demand. Yes, that's true. But there is manipulation in the markets. But if you're not willing to take profit, it goes up here and it comes right back down. Goes up here, continues on. Goes up here, stays there for 6 months. And goes up here, goes down, goes back up, goes past your price, comes back down. You still haven't taken profit. Yeah, you're making dividends, right? You get dividend paying, but you got to wait 3 months. This is a quarterly payer. I got my full year's worth of dividends, and I have to go back. Let's take a look at the classic. Let's see. I can't remember when we bought that. Yeah, it's not on. You can't see it there, so you can see where we sold it. So it's got to be at least past 7 days ago. That's as far as this little chart goes. It tells you. So, yep. I guess we can watch. We only got about 6 minutes left, and I don't see too much happening here. That Han's probably the closest, so we can leave that one up. You can see all these other ones that are starting to get a little boost. PNW. Yeah. Pepsi. Yeah, pretty light day overall. It just kind of looks mixed to me. In our accounts, if you looked at the overall market, you see kind of a different story, everything down, but it's coming back a little bit. NASDAQ's coming back up. You're pretty much flat on the ES, so that doesn't tell us a lot. But you can follow us on Twitter through the day if something happens. We post all the trades. You can find that on Dividend Collection Team at T1 Recon Rider. Let's see what Bitcoin's still hovering around the 56,000 mark. Looks like everything's starting to move down a little bit though. Maybe we get one more push before the weekend. Make a few more shekels. So even in a flat market, with a market that's not really moving, you're still pulling in shekels. There's no reason to get antsy. Just let it come to you. All right, well, we got about 2 minutes left. We'll sit and watch this, but now you can go out and do something. Don't worry about what happens in the market. Just stick with the plan. We buy on pullbacks. We're not worried about what's happening from day to day. All we do is manage the accounts. Stop worrying about trying to hit the home run. Money will come to you. You just have to be patient. It's all based on the size of your accounts, not based on, some algorithm that's going to figure out the market. There is no such thing. It's just math, simple math. Once you get good at it, you can go on vacation and it'll continue to make you money. You don't have to look at this every day. You shouldn't be, You have your orders in, you're willing to take profit, and that's really all you need. Concentrate on the ones that are going to give you a better, return on your money. Banks are definitely a thing of the past. But yeah, I don't see much happening today. Maybe that closes out. That's the closest one to our target. A lot of others just floating around, have no idea where they're going. Just remember, I have no idea if it's going to go up and hit this. I don't have some crystal ball that tells me that that's where it's going to go. This is all done with math. You know, this thing was probably bought back here a couple months ago. It's been sitting in this account. It's got one share, right? And we're trying to make whatever the percentage is on it. It's going to make us basically $4. That's all you're worried about, is trying to hit that. But in the meantime, we collected another dollar, didn't we, on the quarter? So we're going to actually make $5. Now you look at your overall portfolio, multiply that by 1,000 different stocks, another 1,000 trades, and you start to see the power of the numbers. So don't forget, the trading small is probably the most powerful way to trade, because you can reduce your risk and not take losses. But that's it for now. We'll post any trades that happen through the day. If I get them on my phone, I'll post them on Twitter. Other than that, I'll be back here at 2:30. That's Central Time. And have fun with the rest of your day.